Welcome to this week's Crypto Market Deep Dive. We will be diving into the highs, lows, and everything in between from the past 2 weeks, while peering ahead to what the next week and the coming 3 months might hold. Buckle up because the crypto world never sleeps, and neither does the opportunity or the risk. Speaking of opportunities, please click the link in the description to access a new report that provides a detailed look at specific opportunities and the price points where you should consider selling. Let's dive into the video. First off, let's rewind to the past 2 weeks, from August 9th to the 23rd, 2025. The crypto market has been a roller coaster, folks. Bitcoin, the king of crypto, started strong around $116,000 on August 9th, according to Yahoo Finance data. But, oh boy, it dipped hard midweek, sinking below $113,000 as fears of inflation and tariffs rattled investors. CNBC reported over $500 million in long liquidations, wiping out leveraged positions left and right. Yet, Bitcoin showed its resilience, bouncing back to hover around $116,000 by week's end, with a market cap pushing the global crypto total toward $4 trillion. That's a testament to its role as a digital gold in uncertain times. Now, Ethereum, that's where the real fireworks happened. The second largest crypto surged 15% late last Friday, August 22nd, hitting a new all-time high of $4,885, surpassing its November 2021 record as per CNBC. This came right after Fed Chair Jerome Powell's speech at Jackson Hole, where he teased rate cuts, saying the balance of risks is shifting. Ether's dominance climbed and spot ETF demand exploded, with inflows outpacing Bitcoin for days. But profit-taking kicked in, pulling it back to around $4,700 by August 23rd. Still, that's a massive win for the Ethereum ecosystem, fueled by DeFi growth and Layer 2 adoption. Shifting gears to economic indicators, these are the macro forces shaping crypto's path. Let's talk PMIs, or Purchasing Managers' Indexes, which gauge manufacturing health. In the U.S., the ISM Manufacturing PMI clocked in at 48 in July. That's contraction territory for the 5th straight month, down from 49 in June, as reported by the Institute for Supply Management. Weak demand and high input costs are weighing on factories, which could prompt the Fed to cut rates sooner, boosting liquidity and risk assets like crypto. Over in China, the KXN PMI fell to 49.5 in July, signaling a slowdown in exports. In manufacturing, Reuters noted this undershot expectations, adding pressure on Beijing for stimulus. Eurozone PMI edged up to 49.8 in July, nearing stability, with August flash reading hitting 50.5 for the first expansion since April 2022 per S&P Global. These mixed signals suggest global growth is sluggish, but that often translates to easier monetary policy, a tailwind for crypto, as lower rates make yield-seeking investors turn to Bitcoin and altcoins.
Inflation data. The U.S. CPI rose 2.7% annually in July, holding steady but cooler than forecasts, according to the Bureau of Labor Statistics. Core CPI ticked up to 3.1%, yet overall it's a sign inflation is taming. Good news for crypto, as it reduces the odds of aggressive rate hikes. Personal savings rates in the U.S., they're stuck at 4.5% as of June, per the Bureau of Economic Analysis. Low savings mean folks might dip into investments like crypto for returns, especially with traditional yields squeezed. And money supply. The lifeblood of asset bubbles. U.S. M2 hit $22 trillion in June, up 4.5% year over year, the fastest since July 2022, as tracked by the Federal Reserve. This liquidity surge? It's inflationary for assets. Historically, expanding money supply correlates with crypto rallies as cheap money floods into speculative markets. Think back to 2021, M2 exploded and Bitcoin hit 69,000. We're seeing echoes here, potentially setting up for another leg up. Geopolitics? It's the wild card impacting crypto. U.S.-China trade tensions are heating up, With tariffs on the table, CNN reported consumer prices feeling the pinch, which could trigger risk-off moves in markets. The Russia-Ukraine war and Israel-Palestine conflicts continue per academic insights from Science Direct, creating uncertainty that drives some to crypto as a hedge against fiat instability. Trump's potential policies, like the Genius Act for stablecoins, add a bullish twist, but escalations could spike volatility. Remember, Bitcoin often shines in chaos. It's borderless and censorship-resistant. Looking ahead to the next week, August 24th to 30th, markets might consolidate after Powell's dovish hints, with Bitcoin testing 118,000 resistance if ETF inflows continue strong. Ethereum could push toward 5,000 if it holds above 4,500, but watch for pullbacks on profit-taking. Analysts from AI Invest warn of a critical juncture, with Bitcoin potentially crashing in September per historical fractals, but rate cuts in September could counter that, sparking a rebound. Zooming out to the next 3 months, through November 23rd. Research suggests a bullish outlook, with Bitcoin eyeing $130,000 to $200,000 by year-end, driven by halving cycles and institutional adoption, as forecasted by Bitwise and Bankrate. Ethereum might climb to 6,000 or even 10,000 per Cointelegraph amid ETF demand and supply shortages. Altcoins, we're on the cusp of rotation. Expect AI, DeFi, and Layer 1 plays like Solana to shine, potentially pulling 10 to 50 times from September lows, according to Investing Haven and Exploding Topics. But beware controversies. Regulatory shifts, like the SEC's Project Crypto, could bring clarity or clamps, and geopolitical flares might cause dips. Overall, evidence leans toward an extended bull run into 2026. But hedge your bets, nothing certain in crypto. That's your crypto analysis, detailed, data-driven, and ready for whatever comes next. Stay tuned, stay informed, and as always, do your own research. Until next time.